All right, welcome back into the close. Just give me a moment to set up here, and I'll be right with you. All right, so we're waiting for the negotiations again. Apparently, today is the day that they have to announce it one way or another. Otherwise, it's going to get pushed back uh, till after the elections. You know, with these things, it's always going to be last minute, right? If it wasn't until the last minute, then the negotiations would not be very effective. So let's see what they say. All right. Alrighty, alrighty, alrighty. So let's get started. What's going on in the markets? Let me see. Oh, I have to pop out the little. Where is it at? My little comment thingy. Good evening, my friend. All right. Pop that out. Let me resize it. All right. Okay, so let's start from the top again. All right. Let's take out the noise for now. Don't need that. All right, a little bit of a bounce today, right? Still in consolidation for the equal-weighted S&P. Dividends the same. VIX, right? We have to push higher. It's not doing it so far, but it's not falling either. So, you know, we'll keep an eye on that for now. Let me change this so it can be a little bit clearer. Okay. VIX is definitely, trying to go higher, but it's not doing a very good job as of yet, but not doing a bad job either. S&P 500, not this chart, this one. Okay, it's broken down. It's some kind of a weird kind of, I don't know, bear flag, I guess you call it. I don't know what this is exactly, but we can say that any price action below this area uh, would be bearish. Okay, now we can make this structure. And remember, the count always starts from the first counter trend move. And where is it? So that would be a 1, that would be a 2, and this is the 3 that we completed yesterday. We're in the middle of the structure, in the middle of nowhere, as I like to say, holding above the previous resistance area, and we're just kind of waiting to see what happens. All right, waiting to see what happens. So again, I do these things live. I don't necessarily look at them prior to going live. All right, Nasdaq, kind of the same thing, right? Again, remember, head and shoulders are bearish. It's not a good thing. Maybe do something like this. But again, it's in the middle of nowhere. You know, it's funky looking, right? There's nothing you can sink your teeth into on that one. Let me get rid of these. Okay, so it's in the middle of nowhere within this channel, and obviously it's a 1, 2, 3 down. You can see it as I showed you in the S&P, holding above this area of prior resistance for now. Small caps, back into structure failed. Not doing a good job pushing higher. The fangs, okay, correcting through time out of this structure now. Okay, so we have this going on. All right. So it's kind of, you know, fighting it, pushing lower, not breaking as it should. We still have the lower high, okay? And if this were to break out above this trend line here, then you look for one more up, right? That would be bullish. Transportation holding on. Everything seems to be in a pause so far, right? We'll skip that and that. World Stock Market Index paused as well. We're looking for that continuation M pattern that we've been talking about, but for right now, there's no clear evidence. Same thing with the VIX, right? We were supposed to see if it's going to push up higher or, you know, start falling back down. It's still kind of in a pause. Airlines, a little bit of a boost today, right? Again, hopes of stimulus. China, back into the structure. All right, back into the structure. So this arrow is from our compass, right? That it goes going to go up. It's going to consolidate and then break out. It has done that, but we don't know how far it would go. We never know when a wave will end. Emerging markets back into structure, just kind of, you know, hovering towards the lows. Emerging markets, nothing there. Japan, tight, right? It's getting really tight in there. It's going to have to make a decision one way or another. Can be bearish, bullish, doesn't matter. It's got to make a decision soon. Australia, okay, high basing. We can now say this is a sort of a F flag, right? A little bit of an F flag. It's rising. It's above the inverted head and shoulders, up against the resistance. This too, at some point, is going to have to make a decision. All right. Nifty 50, India, back up, right, into that structure, doing nothing, just correcting through time. Kospi the same. Europe, structure below structure. Oops. Right. It's got to hold. The bulls have to hold above this trend line, right? The burden of proof is on the bulls. You got to hold. So let's see how that goes. Germany. Where's Germany? There it goes. Germany has broken down, not convincingly though. So we have a structure below structure below structure, correcting through time. A lot of noise. A lot of noise. Again, we can make an argument that there's a head and shoulders in play, right? If I kind of eliminate it, you can see it right in here, right? Little baby head and shoulders. UK, same, pausing. Istanbul, we'll skip this. Taiwan, pausing. Brasil, Copa del Mundial de Brasil. Uh, it's doing nothing. Burden of proof again. So the bulls. Saudi, the House of Saud. Weakening. Slowly through time is falling back into that structure. Oil. Little push higher today. Okay. Bitcoin pushing higher. Yes. Yes. Breakout, baby. Breakout. Do it. Let me fix that. All right, so yesterday we had a push higher. Today it's continuing. This is the kind of follow through we want to see, a structure above a structure. Now it's got to keep going, right? Because this is incredibly bullish now. We built that high base right below the structure, below the structure. So this now is becoming very unlikely within this structure. And that's the kind of bullishness you want to see. It was making me very nervous when this was going on. Okay, very nervous. But now it's doing a wonderful job pushing higher. Ethereum still hasn't made a decision. Litecoin, nothing. Ripple, looking horrible. Gold, please. Gold. Look at that pressure building, right? Now, we need to see this same kind of action in gold as we've seen it in Bitcoin. And we're still not there yet. Still not there yet. It's struggling. It's struggling, okay? If it drops, right, this is a very critical area. If it drops below here, that would make me nervous. Well, the whole thing is making me nervous because it's a bearish structure, right? It's pointing this way. Price usually goes in the opposite direction. So I want to see more out of gold now, quickly. Otherwise, and again, the compass is what? The compass is this. This is our compass. So this should resolve to the upside, but not if you start getting these bearish kind of structures, right? So we'll see. Baidu, China. Okay, this continues to push higher. That's fine. My little fear indicator is still not breaking out. Real estate, sideways. Nothing there. Commodities pushing higher. Yes, that's good. That's good because we've said that commodities are going to do well. They've likely bottomed, and clearly again, you see the little bear flag, 1, 2, 3 down, blah blah blah, pushing higher. So that's good. Palladium pushing higher. Very nice. Copper. Ooh, copper. Very nice. Okay, so I'm not supposed to have this on there anymore because they were crying. They're like, you can't advertise. I'm like, all right, whatever, dude. So my target area is 3.3171. Anyway, little more upside for sure. Okay, and then when you look at the bigger picture, we can really take off from here. So I posted yesterday that South Korea had food inflation of 8%. Shit. Yeah. Yeah, commodities are going higher, but not a lot of people are going to be happy about it. That's for sure. We're going to go to look at the food prices. Hyperinflation again. Got to deal with that. Base metals pushing higher. In fact, they've broken the previous high, huh? Wow. Very nice. Very nice. Very nice. All right. Well, not for consumers, but for the charting, of course. Agriculture. Still, see, this is very bullish. You see it? Again, it's the message of the market, right? Although things are breaking out, look at that. Keeps testing, keeps testing. This is gonna go. right? It's going to go. Just a matter of time, building that pressure. The compass. Always keep your eye on the compass. This gives you a good sense of direction, right? This is the compass. All right, should resolve to the upside. Can't make it any easier for you guys. You've been with me now a couple of weeks, and you guys should start to pick up on how I see things. All right. Precious metals are still struggling a little bit, but they are slowly through time coming up against the resistance area. All right. Uh, Kind of a weird, funky kind of, slowing down kind of thing here up against this resistance area. Not a pattern that I recognize other than it's correcting through time and it's pausing, right? Like the rest of the market. Commodities overall breaking out. Very nice. Sugarcane up against the resistance. Clearly defined structure. All right. 1, 2, 3 up. Now, the compass on this one particularly is down, right? And the structure is showing this way. So, you know, we need to see this push through incredibly bullish. You can't, if it starts failing here, then mm, that's not going to look good. But again, the message of the market's commodities bullish. Corn, very nice. Wheat, woo, breaking out all-time highs, not all-time highs, recent highs in 2020. Looking really good. Silver, building a high base. Soybeans, ooh, it's ready to go. It's ready to break out. And that is a 4-year breakout. Oh, oh, you want to buy that shit, right? Now look at the speed that it rose, right? You're going to expect somewhere to get something like this or something like this, right? Well, that's not very good. Something like this and then higher, right? That's something that you have to expect. But it's bullish, man, like the rest of the commodities. Dollar, back down again. Failed miserably to push through. All right, but it is correcting through time. It is pausing. Let's fix this a little bit. Okay, get rid of this. So we'll see how this plays out. US dollar, Japanese yen, popped, failed. Euro, US dollar, breaking out. There it is. There it is. Nice little breakout right there. Very nice. So now we know where to stop out, don't we? Right? We know where the risk reward is. This is very nice. And that's what we want. We want to know where the risk is, where the rewards are. And that's the whole point. Great Britain Pound USD. Still consolidating. US dollar Turkish lira. Holding. US dollar ruble. Look at that. Failed breakout. All right. You could see the dollar fall against the ruble now. That would be interesting. Right. The message of the market so far in the dollar is not good. Not good. Which means what? We'll likely get a stimulus today or something, right? If somebody can pay attention, because I can barely hear the TV, and I don't want to play it here because YouTube is going to start whining. This is copyrighted. So let's get rid of this. Yeah, broke down. Australian dollar still correcting. New Zealand dollar holding. US dollar China new lows. Oof. Wow. We're going to go back to 2018 lows, I guess, huh? Wow. Yeah, trade deal worked great. Everything we import now from China is going to be more expensive. Wonderful. All right. So that's the message of the market. The message of the market is likely we're going to get a stimulus, and the markets are pausing for now, and to see what's going to happen. Quickly to go through the fangs, we had a breakdown. It's popping back up, not very convincingly yet. Amazon still correcting, right? Pushing a little bit lower. Apple not doing a very good job. Netflix back into structure. Nvidia weakening. Tesla breaking. Ooh, breaking. Now remember, last time this thing broke, um, the market went down with it, right? So I'm not saying that Tesla is, driving the market, but the risk off of it all uh, may indicate that the market is not very risk appetite. So how much has it fallen? 10%, huh? Wow. Wow. But this is, right, with no doubt, um, this is since March, a very big trend line, 8-month trend line. And if we were to complete the structure, rising wedge about to fall, mm, not good. All right, take a look at the airlines just at a glance. Spirit is up 4.3%, and Spirit is not the best of breed. And finally, we saw EasyJet get a nice little pop here, right, up 5.6%. Again, this doesn't make sense to me. Uh, if anything, if you're in Europe or you want to own this, okay, a break above this, I think is a very good long-term buy. Long-term. Let's get back to the markets. All right, just going back and forth doing nothing, right? That's all it's doing. And again, so long as it's within the structure, the bias is to the downside, right? So, hi Mike. Deal or no deal? Anyway, yep, we're just waiting for that data. Uh, Again, if somebody's paying attention, please post it because I can't hear it very good. S&P kind of broke here a little bit, then bounced. Fuckery move up, back down. Uh, no real structure, right? It's just noise. There's nothing you can, I mean, there's nothing you can really analyze there. Okay, and that's why I didn't come in earlier. There's, you're just waiting. There's nothing there. There's nothing there. If there's something, believe me, I will be the first to come on. Any questions so far? One second, I'll be right back.
Mic off. Mic on.
All right, back with you. So we wait. We wait. Let's go through the Twitter stuff. Who is this guy? Ooh, he's looking sharp. Uh, shit that we see. He's probably selling you what, another stock or something? What is he doing? How to trade stock successfully? Anyway, uh, California September housing sales up 21% year over year. Activity listings down 48%. Makes sense. Unemployment rate was down zero point 0.5. If I remember correctly, 17 states were neutral, 30 states showed a reduction, and 3 states an increase in unemployment. Still 7.9%. Housing starts 1.415 million annual. Bullish. Everything is bullish. Yeah. This one, they love. They're like, yes, top tax rates by states under Biden and tax plans. Oh, trying to scare people with taxes. Yeah. Yeah, see, it's a lot of fun when you're printing the money, but then when you got to pay the taxes to kind of keep the currency solvent, not so much fun. We don't like this. No good. Soviet economics. All right. Definitely a positive trend in cases. I don't think anybody can dispute that at this point. So we have more testing, and the rate of infection is rising. Now there was definitely some fuckery in here, right? When we switched over from CDC to fuck, I forgot what it is, but it doesn't matter. But we have since increased testing, which is a good thing, all right? But the positivity rate has risen as well. Not good at all. Not good at all. Um, yeah, that's not good. All right, so let's watch paint dry some more. Let's 10 year. I didn't do the 10 year. How did I skip that? How did I skip that? Where the fuck? Oh, there it is. All right, continues to rise. All right, that's not good. You don't want interest rates to rise, homie. No, 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 no. We are now testing the previous highs. Let's mark that right in there. So we got a drop. Now we're getting a tight, 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 straight up move. And we're almost up to zero point 0.8. Now, you know, uh, if this continues to go in this direction, in the economic environment that we're in, and, possibly more stimulus coming our way, it's not a good thing. Okay, it's not a good thing. So, if it were to drop below 0.72% in here, that would be bad for the markets in terms of market action, right? Not bad for the economy, but for the market action, that would be bad. Um, because the bond market is going to be signaling fear. See, this is one of these very complicated kind of explanations. Maybe we'll go through it. At least I'll try. Okay, so you are the head of the U.S. economy, and you want interest rates low so people can borrow, buy homes, right? Cars, large ticket items to keep consumption up. So you want them to borrow privately. If the interest rates rise, then that makes it more expensive, right? So that's not good for what you as the leader want. In terms of the stock market, when the earnings yield of the stock market, the corporate profits are suppressed, and uh, the, the stock price are high, you get an earnings yield that is quite low. But relative to bonds yield, they are higher. It's better to own a stock than it is a bond. But there's a compression that's going on right now because the the 10-year is rising and the earnings yield is falling. And this compression is not good for stocks because it makes them less and less and less valuable as that compression occurs. So if the 10-year continues to rise and the earnings yield is not rising to compensate, right? And how do you do that? How do you get the earnings yield to rise? Well, there's two ways. Either the stock market sells off or the earnings improve dramatically, okay? Or any combination of those two. So if you get that bond price higher, you're going to get compression, which is bad for the stock market. And I think I have it here somewhere. Where is it? Where it be? No, 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 no. I'll find it. Is it this one? Oop. Nope, 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 nope. I'll just click on all of them. And let's take a look. Anything new here? 1020 speech by governor. Okay, speeches we don't care about. We need more stimulus. Yes, got it. Thank you. TSA numbers. We hit 1 million yesterday or 2 days ago in air travel, which is really, really good as a milestone, but not good for the airlines. Again, at this rate, it'll take 2 years for us to recover.
Now I'm going to discuss how we would look for a new law.
Skip that. Skip that. What the hell did I do with it? Right. There you go. See how it's falling? No, come on, move over. See how that's falling? 2.88, and then you have the uh, bond yield rise, compression, right? You want this to be going up and the bonds to be going up. All right. So it's a funky kind of thing to explain to people who don't understand these things. All right. Did we look at the New York Stock Exchange? I think we did. But it's falling. Dow Jones, same. We'll go super, super, super small. It's probably more entertaining. All right. So 70% of the trades went off right in here in the middle. Um, the market has more or less settled into the point of control. at 11,696. Okay, this is for the day. Same thing with the S&P. No sound. Can you hear me? Hello. Don't tell me there's no sound. Don't be scaring my shit.
Mic off. Mic on.
All right. Hopefully you guys can hear me. Uh, Lena said you can. So anyway, let's go through today's market leaders. Um, Energy, financials, right, and communication. At the bottom, consumer staples, healthcare, and materials. Last 5 days, industrials, utilities, materials, financials. Yeah. Consumer discretionary, kaput, down 3.2. Information technology and communications. All right. Not very bullish. Have we got an update on the broad money compared to the world? Nope. Oh, yeah, September. Ah, it increased. Very nice. Now we're up 24% in the last 12 months. And Nigeria and Armenia are our neighbors, led by Venezuela, Zimbabwe, and Argentina. Sudan, Turkey, Zimbabwe, Zambia. Ooh, nice company, huh? Print, print, print. We just can't get enough. And that's September. Wow. That's, again, crazy, huh? That's crazy. Yesterday, I don't know if I mentioned it. I did post it, but deficits in the a little over 2 weeks, about 17 days or whatever, 16 days. $203 billion added to the deficit. Wow, right? That keeps up. That's going to be fun. That's going to be fun. All right. So let's look at the volume weighted average from the all-time highs. Okay. Look where price is. Point of control. Right there. Right? Magic. 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 That's the S&P. Let's look at the NASDAQ. Still above the point of control. And not only that in the NASDAQ, you're also outside of the 70% of trading volume, right? Or just at it, you know? So, interesting. Interesting. Again, this is problematic because I can't go to less than a day, but it doesn't matter. Right, point of control, just just above point of control for the market leaders. VIX is rising a little bit, up 0.17. Hmm. It's gotta hold this, right? 28.3. It's gotta hold it. You keep getting those spikes up, up, up. Right. Eventually, this is gonna go. When it starts doing something like this, it's a high base formation. That's not good for the markets. Again, the bias within the structure is down. That's the bias. Transportations. Did I say transportations with an S? Transportation. There's only one. When we fly airplanes, the foreign pilots they say gears, gears down. Well, there's only one set of gear, landing gear. It's funny, they all say the same thing. No matter where you are on the planet, by the way. Asia, Middle East, doesn't matter. Gears, gears down. That's another thing. You know, in Asia, no one is running around saying, oh, this is just the flu. Nobody says that in Asia. In Asia, they're like, yeah, this is the virus, a COVID virus. No one runs around. Only in the West do we say, well, it's just the flu. Interesting, huh? How a president can influence a whole region of the planet with bullshit. Fascinating. What the hell is what is CNBC saying? They're like, yeah, they're using deodorant and toothpaste. Strange. I bet they're gonna take this into the after hours. You know, that's how they do shit. Maybe U.S. and Europe is not the flu. Oh, that's good. That's good. Yeah, U.S. Yeah, a whole entire continent, 340 million people. It's just the flu. Yeah, yeah, yeah. That would suck if they take it into the close, huh? 8 minutes left, and then in after hours, of course. Screw everybody. Place your bets. Place your bets. Remember, investing is not about guessing. You're placing bets on these things, you're gonna get crushed over the course of time. Anyway, I hope you guys are starting to figure out how to listen to the message of the market, to allow the data to tell you what is going on. Um, Something that I haven't done here is to go into the monthly charts, okay, and then weekly, and to see, what does it look like? What is it? When you start your analysis, you want to, especially in the beginning, you want to start with the monthly, and then go down to the weekly. Okay, go through all of them, then go down to a weekly, and then you go down to a daily, and then you go down to an hourly. Okay, and this way, and especially if the charts are clean, right? Always, oh, never forget that. Always keep separate charts. One that's completely clean and one that you've done your analysis on. This will help you greatly. Now, when you look at the upside, when you're expecting the market to go higher, you want to keep it on log because it's not the nominal amount that the price goes higher. That doesn't tell you anything. If I'm going to put $100,000 at all-time highs, I expect 10% return. Okay, so you want to see it in a log. Conversely, when you're in a bear market, the log is not really going to help you because it's going to mislead your eyes on the way down. It's going to look like, for example, if you look at Tesla, uh, where is it? Right? You look at Tesla. This doesn't look like a big drop. It's just, whatever, right? But it's a 32% move. I mean, yeah, 34%, 35% move, right? So this is deceiving to the eyes. You don't want to look at it that way. So then you got to take it off of log, because then you can start to see that, oh, wait, this was a very big move down. Okay, so please try to understand the differences between log, right? Log is expected return, and then non-log is you can see the actual price move, and then you say, oh shit, I got to measure that, right? And then you go out and you measure it, and you're like, fuck, that's 35%. You know, wow. So keep that in mind. I won't talk too much about the longer term stuff. That's more for the subscribers. But keep that in mind. These are small, seemingly simple, dumb things, right? But the impact is huge, right? Don't deceive your eyes. Look at the charts properly. All right, 3 minutes left to go. No news. We're in a pause. Markets are in a pause. The dollar is weakening. Okay, and it's weakening uh, in an area where it's not very desirable because it's broken down from this structure, right? Up. It is pressing against the resistance area over here. That's true. That's the bull's case, right? That they can push through. And if that does happen, then that would be, in fact, bullish for the dollar. Um, but for right now, it's not doing a very good job. Okay. Has this move satisfied the drop from the bearish structure? Answer is yes. Okay. It doesn't have to go much lower. It doesn't have to make a new low, right? It has broken, and it's corrected through time instead of price. That's something you got to keep telling yourself. Is it doing it through price or time? A lot of people don't factor in time. All right. Let's look at this as well. I want to see what the 3-month moving average is and where we are relative to that, which is a daily. We're still holding above it, right? The black line here. Still holding above it. So there are right now more buyers that are bullish than bearish, right? Until you start falling below this 63-day moving average. And it doesn't matter what you use. I use 63 because it's a quarter, right? It's a quarter, and it takes a quarter to put on a position and take it off. Okay. All right. Market's closed. Selling off into the close, down 0.5%. We were up 0.12, and then it sold off in the Nasdaq rapidly. S&P is kind of holding its own, right? And that's the difference, I guess, that you have the point of control that's below you. The S&P is at point of control. Where is it? Right. It's at point of control, but the Nasdaq was not. So the Nasdaq fell harder than the S&P. Okay. So kind of makes sense. Is it useful information? No. I'm not going to trade that, but just nice to know. All right. So that's it, guys. Any questions? What's the macro effect of not collecting payroll taxes? Does it end up saving accounts and quickly? Well, payroll taxes pay for Social Security, right? Um, so, do you need to collect money from people in order to have Social Security? No, you can just print it up. That's the harsh reality, right? We want to sensationalize it because of Trump and whatever, but the fact of the matter is, you can just print it up, and who gives a shit, right? We've printed $4 trillion. Nobody gave a shit. Um, but again, you know, you keep adding to these deficits. You keep adding to these deficits and adding. And you know what? Let me make another point here because that's a good question. Let me make another point here. Here's the daily treasury statement. And you know what? Let me pull the new one. Here it is from yesterday. Where's Social Security? Somewhere in here. Actually, let's go to the other one. You know what? Let's look at whatever the deficit is today. 133, the same. I think it's better if we see the fiscal year, not December. By the way, the fiscal year ends September 30th. Okay, for the government's checkbook. We did about a trillion. Where is it? Where is it? In Social Security. Where is it? I got dyslexia, man. I gotta go through these one by one. I'm going through price. There we go. No, yeah, Social Security benefits, right? There you go. It's about a trillion. This is not really a deficit, right? It's not. It's not. You paid into it. It shows up. So when we look at the deficit, it was 4.234 trillion. Yes, but technically, Social Security benefits are not deficits, right? It's been paid for, so it's something to keep in mind. Something to keep in mind. Now, you know, you don't do income tax. You don't collect Social Security through income tax. Then you know suddenly that's going to drain it very quickly, and then you end up with a real deficit. And it's not that we can't do it. You can do it. Doesn't mean you should, but you can, right? Another thing to consider is, for the fiscal year 2020, you can see that the cash redemptions, right? These are bonds that were rolled over, okay, and that includes all of them, 15 trillion dollars, and we issued 19 trillion dollars in bonds, okay, and that's where you end up with the deficit. The printing of money, the actual definition is the expansion of bonds. The expansion of bonds. That's the money printing. It's not physical. QE is printing because the Fed is purchasing those bonds in exchange for cash. It's an asset swap. It doesn't increase the deficit, but it increases the money supply. They like to call them reserves. Well, call them whatever you want. All money is money. Dollars are dollars. If you give me your $100 bond, I give you $100 cash, right? You put it in the bank. It's a reserve. Okay, you can do whatever you want with that money. Uh, it's yours. You own it. A lot of people like to say, "Well, it's the banks. It's the banks." Well, the banks don't have the savings, right? It's the people that put the savings in the banks. So, you know, they change ownership the moment they say the banks. Who are the banks? The commercial banks, the primary dealers. They change ownership, and that's not right. It's misleading. I mean, I understand what they're saying, but the average person doesn't. And that's problematic because of the bank, the evil banks. It has nothing to do with that. Who owns the savings, right? Top 5%. The companies, right? The people, high net worth individuals. Uh, anyway, I don't want to get too much into that. But that's a good question. Thank you. Appreciate it. I hope I answered it effectively, right? All right, guys. One last look at the markets. Still pushing lower, holding that 0.5% down. Right? They're not very optimistic about a lot of money being announced. And the likelihood is that the vast majority of the stimulus will come after the elections. That's my cute story. I think that's what the market is indicating. And that's it. All right. If something were to happen, I'll come back live. So don't forget, like, subscribe, and you will get a message. Also, don't forget, come down to patreon.com/, RealMacro, Real Macroeconomics and Investing. Okay. And we can, uh, you guys can be part of the live chat. All right. That's it. Thank you very much. Sayonara. Hasta luego.